Hey everyone, welcome back to another weekly market outlook. This is for the 26th to the 30th of December 2022. This is the last week of 2022. My name is Vito Henjoto, and welcome back with a previous week recap. Surprise move from Bank of Japan last week, expanding the JGB yield cap from 25 basis points to 50 basis points, maintaining the 0 basis points target range. Now, this was the surprise bomb amidst a very thin trading here. So the move created an exaggerated gain in the Japanese yen amidst the thin trading in the market, but was limited to Japanese yen crosses and does not spill over to other major currencies in the market. So I think that's a good thing. Canadian CPI gains slightly, but the trim CPI, or the core CPI, remains unchanged at 5.3%. That's bringing in a little bit of stability in the inflation over there. German business and consumer confidence improved slightly. Then we have the RBA meeting minutes, giving no surprise, with the RBA deciding on a 25 basis points, considering the lack of previous interest rate hikes to affect the market and prevent over-tightening their monetary policy. Growth and labor market remains strong in Australia despite a still high inflation reading. And we've got the US core PCE index, or personal consumption expenditure index, month on month as forecast was at 0.2%, as the previous number was revised up to 0.3%. This is composed of personal income at 0.4%, which is a drop from 0.7%, and higher than forecast of 0.3%. Personal spending at 0.1%, a drop from 0.9%, and lower than forecast of 0.2%. What does this mean? It means that people are actually their income is improving and they're not spending as much, and this is probably a good thing, and probably an impact from the increased interest rate hikes in the US there. And then we have the year-on-year PCE price index also fallen from 6.1% to 5.5%, showing us that yes, whatever the FOMC is doing, it's on the right track. People are starting to save up a little bit more and spending less. All right, so very quiet week this week. We've got Sunday and Mondays. You can take a look at this here. We've got bank holidays basically throughout the Western countries here. Boxing Day, Christmas Day, rolling over to Monday, and some of them even rolling over to Tuesday. So we've got the UK and Canadian market both closed for Christmas and Boxing Day. Other than that, we don't really have any high impact news numbers here. We've got the Bank of Japan core CPI numbers, but the real deal is going to come in January. So other than that, pretty quiet weeks. Okay, so we actually might have a shorter outlook this week. Again, on Wednesday, nothing much is going on. On Thursday, nothing much is also going on. Probably the news in the market that's going to create something is probably going to be the unemployment claims in the US. But again, nothing really critical throughout the whole week. So we are going to experience a very quiet week, at least coming out from the fundamentals. With that, let's just switch to the technicals. We can take a look at gold first, because again, I'm gonna get a lot of slack if I don't talk about gold. So with all the whole Bank of Japan stuff, people are thinking, oh yeah, around safe haven, people are running to gold, and people are moving away from the US dollar. In reality, we're not really looking at a lot of price movement. We are still going to be capped. We still have that resistance at 1825, which was the 161.8% on the daily time frame. And then we have support at 1800, 1795. This is where price is currently starting the week at right around 1795. Now, if this one goes down, we do have support coming in at around 1775 to about 1760. So technically, we're looking at a range bound market for gold here. Moving on to the Australian dollar. Australian dollar is also flat. It's just trading right around support, 66.75, 67 cents. Really not progressing any much further here. The momentum seems to be turning around a little bit, but if this one goes up, we still are going to be capped by 68 cents and 69 cents. So technically, it's still going to be range bound. So last week's price movement, surprise from Bank of Japan, that seems to be impacting the Japanese yen crosses. But if we take a look at the US dollar majors here, or the US dollar pairs, we're not really seeing a lot of movement. And this is again telegraphed on the Euro USD. This is remaining flat, pretty much very close at 1.06. Range intact, resistance 1.07, support 1.05. We're not really moving out of the range for the Euro USD. In fact, this is on the hourly time frame. Take a look at the blue box here. That's basically the range the Euro USD has been trapped in. And the story remains the same. We're not expecting any huge movement here. Very thin trading here. Again, with thin trading market conditions there, it's either market is not moving anywhere, at least until the year ends, or if there's any fundamental trigger in the market or any sudden surprises in the market, something like the Bank of Japan did last week, then it could actually trigger more of an exaggerated movement in one way. But at this point in time, we are still looking at a range-bound market condition. So if you're planning to trade on the Euro USD, the Pound USD, or anything else, just keep in mind they are still contained within a very tight range. If it does break, for an example here on the Euro USD, if it does break on the upper range there, i.e. breaking above 1.0660, it's still going to be capped at 1.07. If it does break below 1.06 or 1.0575, then it might actually go all the way down to 1.05. But again, if we take a look at it from the daily perspective, it is relatively flat. The same story with the Pound USD here. Pound USD right now is finding itself very comfortable at 1.2, 1.2050. So we're not really breaking any support or anything like that. If it does break below 1.2, we still have 1.19. This one here, if the stochastics pulls up a little bit, and if it bounces off away from 1.2050, we still have 1.2150 to cap the market. Obviously, beyond that, we might still have 1.23. Right. So dollar yen, it's probably the biggest impact last week. We saw a significant drop. We saw about very close to about 500 pips drop, of 4 or 5 yen drop. But right now, where it's finding support very comfortably between 130, 135 to 132. So technically, we're still looking at 132 as the key support for the dollar yen here. This one, I don't expect a lot of price movement, because if we take a look at the yield cap that was imposed by Bank of Japan, let me just bring it up here very quickly. This has actually touched the 50 basis points cap. So let me just highlight that for you. So price actually went to 50 basis points there. Right now it's stable. It's stable below. It's stable around 40 basis points. So if this one moves to the upside this week, while we might see a significant gain in the yield here, about 10 basis points, it might not translate to a strengthening yen or a significant strengthening in yen, just like what we saw last week. Okay, so keep that in mind with the yen there. We did talk about the difference between the bond market and the currency market previously, so don't think that these two assets are relatable 100%. Okay, so finally, just to wrap things up, let's take a look at the dollar index here. Dollar index very stable at this point in time. It is still below 105, but we're not below 104. So until we see a daily close below 104, then we are actually looking at a pretty much flat US dollar leading up towards the end of the year. With that, have a fantastic holiday ahead. Merry Christmas to anyone that celebrated Christmas just yesterday. But other than that, have a great, fantastic break ahead. Have a great, fantastic new year. Good luck with the trades, and I'll see you soon.